It's all over. It's all over. What are we gonna do with the Fed rate hikes? They're gonna bring down the economy. What are we gonna do? We're gonna run to the hills. Everybody run for cover, man. It's all over. The Fed rate hike's gonna bring down the economy. Hey, everybody, how we doing? I tried to do a New Jersey accent. I just had a client earlier from New Jersey, so I tried to imitate how they talk over there. I like the accent. I like talking to people from New York, New Jersey, East Coast. I like talking to people from Boston. All right, it's the weekend, so I might be a little goofy today. I hope you guys don't mind. I actually had to get up really early today. I'm not as well rested as usual. Well, let's talk about the big news. What people say is the big news. A tiny rate hike that's likely to happen in July, probably a 1/4%, is supposedly going to be the straw that broke the camel's back. It's going to be the one that brings down the economy. There does have to be a breaking point at some point. We know that the policymakers, they're typically behind the eight ball, behind the curve, and they're usually wrong. But the data that they rely on is very delayed, and they always say they're data dependent. And with the Fed being data dependent, they're always going to be behind the curve, meaning they're looking in the rearview mirror to decide what they're going to do in the future. Because these rate hikes, they've been small, and that makes it even more dangerous because now it's even a slower response. All the people with the credit card debt, they weren't suddenly unable to afford their minimum monthly payment. It's been very slow and incremental, and people are slowly walking towards the financial edge. And again, if you don't know, record credit card debt, the pace of debt increases continues to set new records each quarter. It's not sustainable unless we see some massive debt forgiveness programs like we saw. We saw a little bit of debt forgiveness in the student loan area, but they would need to do a massive debt forgiveness scheme to help people, all the people that are in so much debt right now.
Let's take a few seconds to talk about protecting your wealth. The US dollar has lost 90% of its value since the 70s when the dollar was decoupled from gold, and the government seems bent on continuing the tradition. From now until the next elections, the government can print as much money as it wants. The last time they did that, inflation went up by 9%. This means one thing: the security of your future and your family's future is in your hands. Make sure you freeze the value of the wealth that you're holding. Invest in gold with Noble Gold Investments. Gold is the one asset that has proven to withstand recession, inflation, and just about every other economic threat. Noble Gold Investments is here to help you if you want to invest in gold. You'll also get a free 24 karat 1/4 ounce gold standard coin for free. Go to bullboomgold.com. That's bullboomgold.com. Noble Gold, the only gold company that I trust. There's always a risk of investment, and there's no guarantees of any kind.
It's getting more interesting. We're about to find out if the forecasters and the economists that are saying that this will be the rate hike that broke the camel's back. We're going to see if these people were correct. I don't think this is the straw that broke the camel's back. I think these rate hikes are too slow, so it's going to take more time to play out. I don't think we're going to see true carnage until towards the end of the year, but we're already starting to see big problem areas. Foreclosures are up. Corporate bankruptcies are up big time, almost setting a new record. Individual bankruptcies are on the rise. Late car loans are on the rise. Right now, it's mostly concentrated in subprime, but we're going to see that spill over into prime borrowers and people with even good credit scores as the economic destruction continues. Most of you know this. Let's get into some recent economic financial news here, okay? Let's talk about this right here. This is an article, recent article, talking about investment banking, how bank results flash warning signs for Wall Street. What they don't talk about here is what I think of the bigger issue is commercial real estate. But the big question we always have to ask is, are the banks going to be bailed out? Will they be allowed to fail? If banks are allowed to fail when their portfolios crash, then the economy will crash along with it. Why? Because the entire economy is propped up on continuous debt, not just continuous debt, continuous increasing amounts of debt. You see, when the debt stops, increasing, that's when everything freezes up. Job losses accelerate. Just look back at the 2008 chart. We've showed it here many times. Debt climbed, climbed, climbed. All of a sudden, it stopped when mortgages started going bad and banks pulled back on the lending, severely pulled back. And you saw a big drop in debt. And what happened? The economy came down with it. They had to come in, they had to rescue the banks. And it was that new money, money that people could borrow now and go out and spend it and take out more loans. That revived the economy. And we've seen over 10 years now of just massive debt accumulation, uh, masquerading masquerading as an economic boom. It's that simple. When people can borrow money and when banks don't have to worry about people not paying the loans back, then you're going to see an economic boom. And that's what we're seeing right now. Right now, they're being selective as to which banks will be uh, left to fail. We already saw some banks get taken over and fail slash taken over. So we're going to see how this goes forward here, and I'd say it's really hard to predict, what's going to happen because there's so many shenanigans, there's so much manipulation, there's so much maneuvering that they can do to try to keep things propped up. Look at the housing market again in 2020. I have to bring that up all the time because 2020 should have been a housing market crash. Instead, it got turned into a housing market boom because of all the programs that were implemented to help people keep their homes. And it was very, very quick. If you remember back in 2020, the first month of people not working and staying at home, lockdowns, etc., the first month we had federal employees begging for help through programs like what's that one where you can start a GoFundMe. They were starting GoFundMe accounts to pay for their bills after 1 month. So people don't have much money put away. Even six-figure income earners, they live such an expensive lifestyle that even a couple missed paychecks for six-figure income earners could be a very bad situation. Let's talk about this. The U.S. economy slips into disinflation mode. Disinflation, what is that? Is that deflation? Is that falling prices? Is the cost of living coming down? Well, we could only be so lucky. The problem is when that happens, there's a lot of job losses. So you might see prices coming down and you say, hey, I'm lucky. Then you get the layoff notice and then you say, I'm not so lucky. But this article is talking about the slowdown of the increase. And we look at the consumer price index chart right here. We see it goes up to June, but you see June was actually higher than May, and June was also higher than March, and it was higher than last December. So it doesn't look to me like we're out of the woods. We're not seeing a drop into negative territory. Now that would be true disinflation or deflation when the cost of living finally starts printing out as lower than the prior year. But we're seeing everything positive, 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 meaning prices are still up. And even if prices do go lower than they were the previous year, they're still up compared to 2 years ago. They're definitely up compared to 3 years ago. So we have a long ways before prices, the cost of living, adjust to even somewhat affordability. And how do we get into this mess? It's all the money creation, the lending, people buying things that they normally would not be able to buy. It's as simple as that. You have money created out of thin air that creates the demand side, or that causes the demand side to outpace the production side. So when people are buying more than is being manufactured, being produced, prices go up, right? It's really simple, supply and demand, and it all goes back to the money that's not limited and it's no longer attached to gold, which has been over 50 years now since it was attached to gold. And speaking of gold, that's ultimately what we're going back to. We're going back to a asset-backed currency, and it's going to be largely, I think, backed by metals, especially gold and silver. We see what the BRICS nations are doing. We see the dollar is already beginning to dive. So if you're not diversified in your portfolio to include some hard assets, I would strongly encourage you to give that some consideration. And a lot of people say, JJ, I don't have the money. I don't have any money at the end of the month because the bills are too high. I understand. If you have a 401k, there's a way to do that. We just heard from our partner company earlier in this video on how you can integrate your 401k or convert some of your 401k or all of it. I wouldn't say that people should put all of it in, but at least consider some of it into hard assets. Canadians are concerned about debt and the ability to pay bills. They're concerned that they're not able to pay these bills
has reached an all-time high. So sometimes the truth comes out, and it makes sense in this case. When will we start seeing articles like this about the United States? Because our people in the United States, are they in denial? Is the media just not reporting it? Because these record debt levels can't go on forever. And it seems like a lot more people would be concerned and worried. And their concern should be at an all time high, just like the debt's at an all time high, right? So I think a serious disconnect between the levels of debt and the level of concern that's being reported, in the news here about this. All right, let's talk about this. When you want to talk about some goofy nonsense, some goofy people, record heat sweeps the world. The world. Tourists, though, they flock to Death Valley. Why would you go to Death Valley when record heat is sweeping the world? Well, believe it or not, it's reported here, this is out of the Guardian, that many people, tourists, are going to take their photo next to the thermometer, so they could have a nice little photo on their profile where it shows 130 degrees. Actually, this shows 119 degrees, but reported that it's gotten or will get as high as 132 degrees there in Death Valley. And I could think of a lot of places that I want to go and snap some photos, but Death Valley is not one of them. Even in the winter, even when it's not so hot out there, it's Death Valley. Who wants to go to Death Valley? Some people are into that. Some people are into hiking, going out, seeing the rattlesnakes, seeing the scorpions. Um, I used to be like that. Maybe I'm getting old. I don't know. Anyway, let's go to the next news article here. All right, let's transition a little bit here to something that a lot of people have to worry about, and that's the cost of housing. Um, Rents. Let's talk about rents here. This is the July report, hot off the presses. Let's take a look what's happening with rents. Are rents crashing? Are they dropping? Let's take a look at the chart here in this report out of Apartment List. And if you will kindly look to the bottom right-hand corner there, the purple line, that is June 2023. That's the latest data that we have. And what does it say? 0% growth. Here's the weird thing though, rents are still going up in some areas, down in other areas. Hopefully you're doing good. Hopefully you're not strapped out, stressed out, and in so much debt. But even if you are, we have a little something called bankruptcy. I know plenty of people in my line of work. I talk to people that have filed bankruptcy, and it's not the end of the world. You end up getting a credit card within weeks of filing. The limit might be a lot less, and you have to change your spending habits a little bit. Um, Other than that, it's not the end of the world, and a lot of people are going to be going through it. And hopefully it won't be you, but it's not the end of the world. That's the way of the world here. Bankruptcy is in everyone's vocabulary because it's so common now. All right, everybody, we're going to wrap this up. Hope everyone's having a good weekend. Hope you're not too hot. Hope you're not crazy enough to be out in Death Valley. If you are, hope you brought plenty of ice water and a cooler full of nice, cool drinks. Everybody, keep stacking. Bye for now. Big love. Peace.